the move to proof of stake makes Ethereum miners anxious to kind of talk about how well they've been doing. If you go into some YouTube streams, you can definitely see that they've been rolling in the dough and they're pretty happy to talk about it there. But and maybe it is just like a community difference, right? Ethereum miners are on YouTube, they're not on Twitter. Ethereum core developers are on Twitter. So, there's a little separation there. But I think the proof of stake narrative definitely kind of drives away a little bit of this conversation about Ethereum mining. I think it's also interesting to note that there is not this industrial growth that you see around Bitcoin mining in Ethereum mining, even though the mining revenues have been so high and sustained over the last 7 months. There's some people here and there who are running data centers. Hut 8 runs a GPU farm that they plan on changing to a general computation farm once proof of stake happens. We had American Bit Power on a few weeks ago talking about the same kind of thing. But I mean, you're not going to get riot-sized ASIC farms for Ethereum mining just because of this movement to proof of stake. And I think that's just like interesting to see the design decisions from 2015 walking out now and this 2021 bull run.
Obviously, DeFi has sort of been an incredible use case for Ethereum, but with DeFi also comes miner extractable value. It's been really interesting as a Bitcoiner listening to your podcast on that topic. And, we were looking at the Flashbots dashboard earlier. Around 600 million in MEV extracted so far in 2021, which is substantial as far as a component of miner revenue. And, I think, Bitcoiners shouldn't rush to fix this because there's still a lot of open questions around miner extractable value. That there's bigger incentives for reorgs. There's possibly a regulatory choke point there. It's not quite as clear cut what it means to be a miner anymore, whether or not they're a broker. Obviously, that was a big question with the infrastructure bill this year. So, there are some proposals on the table to add things like drive chains to Bitcoin to boost miner revenue. And I just think, it's better to wait and see, how things work out with Ethereum as far as MEV goes.
Yeah, I think that's a really important piece of the puzzle as well. MEV really took off this year, and mining, as Parker just pointed out, so certain miners are making a killing off that. It could be even more than that. People can essentially take bribes off to the side for reordering transactions or like front running transactions in DeFi essentially. So that's huge. And that combined just with like the NFTs. And I think there's something to almost like the casino effect of NFTs. If you look at the fees per block for some of these NFT mints, like if you're looking at daily fees, obviously it's crazy. But if you break it down even more granularly to fees per block, there are certain blocks that just have like an insane amount of fees because an NFT mint is happening or something else. So there's probably some other effect there where like some miners are attracted to that, where just like you can hit it big with a certain block and just like make a killing instantly. But like others, as you guys have pointed out as well, like this won't go on forever, and it probably will start to subside relatively soon, especially once ETH 2.0 comes on, but also once things start moving to layer 2s, which is already starting to happen. We won't get as many of those kind of ETH minting and ETH trading fees. Same with Uniswap and DeFi, fees coming from DeFi. Those fees will probably start to subside some. MEV is still kind of an open issue, but I'm sure that's going to change and mutate as well. So yeah, it'll be interesting to see how it changes once the merge actually happens.